Hello, welcome to another talk on money, business, and investing. My name is Jose. I'm the founder of the company and brand here at Master Investor. Ensure to subscribe to our channel and other social media platforms. Our mission is to be the global authentic brand on money, business, and investing that elevates the financial well-being of humanity through high-quality financial education made simple. We look for opportunities to build passive income, win-win partnerships, and true wealth, which all requires financial education. Today, we're going to cover how to navigate crypto cycles. Whoever wants to be part of the newsletter, feel free to click the link somewhere in the description, go to our website, and enter the email to receive our articles that we are publishing weekly with financial education made simple, which will inspire whoever takes action on that education. It's all about learning something new about money today and then applying it in our lives and our strategy, because investing is having a plan. As we know here at Master Investor, that's how we define investing, as having a plan. Those who do not have a plan and they're doing business and investing, they're planning to fail, and the business will not succeed ultimately. It's not investing, it's gambling, is trading. Whoever doesn't have a plan is just a gambler. So in order to become an inside investor, we need to understand how to build our assets column with real assets that we control with our companies. Today, we will learn about the different cycles of crypto. Remember, crypto is the new money in town. Crypto is one of the assets class in the game of money. There are 5 different asset classes that exist. The 5 different asset classes are: number 1, businesses; number 2, crypto; number 3, paper assets; number 4, real estate; and number 5, commodities. They all require financial education. When you visit our website, we will be able to see all the products and digital courses that we have available right now to start investing with guidance, with a plan, understanding how to put the legalities in order, and how to have all the 8 integrities that makes a successful business great. And the 8 integrities are mission, team, leadership, cash flow, communication, systems, and legal and product. It's not just the product, the most important aspect of the business. We need to have the legalities in order. We need to have a business that raises capital from the front end. Our investments are supposed to give us capital back very soon, sooner than later. We know exactly how much we're going to get, when are we going to get it, because it's a calculated risk. We have an exit strategy for every single investment that we make. And we know everything about the investment because we are reading the financial statements of that investment. So we can say that the foundation of true wealth is in the ability of reading financial statements from companies, and starting with our personal financial statement. A lot of people have never seen their personal financial statement. They know how much money they make, but they haven't seen it on a financial statement. Once we see our personal life on a financial statement, our whole perspective about money and the way we make money changes. For those who haven't made the shift to the right side of the cash flow circle, remember, on the left side of the cash flow circle, we find the employee and the self-employed. On the right side of the cash flow circle, we find the business owner and inside investor. Wealth is built on the right side of the cash flow circle, because we pay less in taxes. The laws and tax code benefits those who are operating on the right side of the cash flow circle as a business owner and inside investor. And today, we can be operating and ready to start making passive income faster than ever, because we have technology and artificial intelligence. So we have to be ready to adopt the new technology, be flexible to unlearn what we used to know, right? That what used to work doesn't work tomorrow, maybe. So we need to learn how to be flexible in this new economy. And as we know, crypto is the new currency. Crypto is like the US dollar. It's a currency. Today, the US dollar is just a currency. It's not longer real money. So once we understand that, then we will not longer save money in the bank account, because we know it loses value because it's not longer real money. Or whoever is saving money under the mattress will stop doing that because it's not longer real money. There's not need for a person to save money in the bank account or under the mattress because it's losing value by the day. The more the government prints money, because today the economy works with debt. And this happened back in August 15, 1971, when President Nixon separated the gold standard from the US dollar. From that point forward, money became monopoly money, fiat money. And just an idea backed up by confidence is literally a currency, it's paper money. So today, accurately, we can say that money is debt and debt is money. So what we have to become masters at doing is to leverage debt, because debt is money. So we are going to be using other people's money, OPM, the bank's money, through a credit card, through a loan, through a mortgage, to acquire assets, to allocate that money that they're giving us in the form of a loan, to put it to work, to multiply somewhere. The interest rate, the cost of the mortgage or the loan that we acquire will be paid with the revenue of the business, of the investment that we did. So it's not about being debt-free when it comes to building wealth. It's about learning how to manage debt, how to control our emotions, how to prepare for any type of market, because the economy goes up and down. And as an inside investor, we prepare at all times, because when the economy crashes, that's exactly when we want to even be ready to acquire more assets that are a bargain for free, basically, because everybody's panicking. And when everybody's doing something, we gotta do the exact opposite, because majority of people are operating with the old rules of money. That's why we created the 10 new rules of money. Feel free to go get our ebook. Click the link somewhere in the description. We have a digital course on the 10 new rules of money. We also have how to build cash flow with the internet, turn passive income on. And we have how to invest in crypto to build wealth. We're releasing our 4th ebook very soon, how to raise capital to build wealth, because the job number one of a wealthy entrepreneur is to raise capital through debt, through loans. So whoever is talking about being debt-free to build wealth, they don't know what they're talking about, because today money is created with debt. So we need to learn how to use debt, which gives us leverage, and we can create money from thin air with debt. Because when we use other people's money before we even use our own money, then and we create passive income with that investment, then we're reaching infinite return on investment when we have none of our money into the deal. However, we still control the asset and its cash flow. And that is what every inside investor strategizes to achieve, is to get into infinite return on investments when we have money for nothing, literally, because we're using OPM. And guess what? Debt is tax-free, because money is created with debt. The government prints money daily to advance the economy, to do whatever it needs to do for the people. So we need to operate just like the government does. We can do the exact same thing legally, and we can minimize taxes all the way to zero, because debt is tax-free. So the more debt we use, the less taxes we pay. And as we know here at Master Investor, what's the highest expense humans have? Taxes. So once we learn how to minimize taxes using the law and playing on the right side of the cash flow circle, being a business owner and inside investor, then now we have an unfair advantage among the 97% of people that play on the left side of the cash flow circle. All they know how to do is to work for money and save money in the bank account, which they end up losing money. They can't keep up with inflation, because today the economy works with debt. So that means that inflation will continue to rise. What used to cost XYZ will cost more today because of inflation, and will cost more tomorrow because of inflation. So what we have to do, actively invest. That's how we stay ahead of inflation. We don't save money. We don't park money. Before we even touch the money, we have a plan for that money. So if we're saving any capital, we're putting capital to the side, is to invest, because one of the main priority that we have on our expenses column is investing. And we're going to see on today's diagram that we have for our community how the wealthy invest, why the wealthy are wealthy and why the poor are poor. Number one, we know the difference between an asset and a liability. The poor does not know the real definition of an asset and liability, because a lot of times they call assets what they are liabilities, because the way we tell the difference between an asset and liability is the way the cash flow flows. Is it flowing into our pocket, or is it flowing out of our pocket? If it's flowing into our pocket in the form of passive income, then it's an asset. An asset puts money into our pocket whenever we're not working because it's a system of systems doing the selling and telling for us. On autopilot, because literally has systems in place. And we can depart from the business because we don't work for our business. We work on our businesses, not in our businesses. We are the chairman, or if you're a woman, you're the chairwoman of the business. We're not the CEO. We're not the president. We're going to hire the CEO. We're going to hire the president. And anyone that needs to be positioned in our organization will be hired and will be acquired through our vocabulary and the presentation that we give, because specialists and professionals would like to follow great leaders. And great leaders become great leaders because we invest in our self-development. We invest in our vocabulary. We are constantly learning something new. We're applying it into our lives, and then we're teaching somebody else how to do it. And what happens with that is that practice makes what? Improvement. Doesn't make perfection. We can always improve. We can always become a little better than we were yesterday, most definitely. And all of our partners here at Master Investor are living proof of that, because we understand the mindset that it takes to build true wealth, which is constantly invest into something that produces passive income. And we want to get into sectors where the government is also investing in, or they're interested in others to invest in, such as technology, agricultural, right? Food, anything that improves humankind and improves the economy will be a green light for the government. And what happens is that we partnered out with the government, we partnered out with the laws, because that's what they want us to do. And since this is a capitalist system, what is the highest level of an investor? As we know, there are 5 different levels. The highest level is a capitalist. A capitalist is an inside investor, is a master investor. A capitalist understands how to put a deal together and have other people want to become part of that deal. It's all about raising capital. It's all about building a business that raises capital because we're solving a problem. So a capitalist, we look for problems to solve, financial problems that people get into because they mismanage their businesses and they have the wrong team around them. So having the right team around us is critical too when we're building our businesses. And we can start with small steps. We don't have to have huge teams. Today, we have a lot of technology that can replace what we needed other humans to do back in the day. So use as much artificial intelligence today and be willing to learn about new technology. How to navigate crypto cycles. Summary. We can make wiser investment decisions if we comprehend the cycles of the cryptocurrency market. Remember, it goes up and down, and more in crypto. So we need to have a plan as we build a business. Let's say we want to bring a solution to the marketplace, and now that business is going viral. We have a good product. We have a good brand behind it. We have the legalities in order. We have all the integrities of a successful business. The business is bringing us X, Y, and Z per day on positive cash flow. Now we have a plan for that cash flow to be placed in a cryptocurrency. We need to choose the right cryptocurrencies for that money to continue to grow, because crypto goes up and down. So we need to study about the company behind the cryptocurrency. We need to learn about their finances. We need to study and do our due diligence. Remember that in business, the most important words are cash flow. And the second most important words are due diligence. Okay, so understanding market trends enhances profits and lowers the chances of panic when selling. We want to control and acquire as many assets as possible that produces passive income and not just capital gains income. 2 types of income that we can get from investing. Passive income, or also known as positive cash flow. And that's what we're looking for, to invest for passive income, specifically and primarily, because it requires a high level of financial education. And then the other type of income that comes from investing is capital gains income. That's when we purchase something at a certain price and it goes up in value and then we sell it. We will get capital gains income assets because some assets will only give us capital gains income. However, rule number 1 here in our community at Master Investors, that we work to build passive income and multiply money through sound investing. And then because of that sound investing, it will lead us to get capital gains income as well, because we will take advantage of every single opportunity that shows up in front of us because we are prepared for that opportunity. And as we always say here in our community, it's better to be prepared for an opportunity that never shows up than it is not to be prepared and then the opportunity does show up. We want to be prepared at all times, and that's how we stay ahead of the average person, and we stay ahead of inflation and the changes in the world that are happening very rapidly, and we need to stay ahead of the curve. And the only way to do that is by actively invest, by multiplying our money, and by bringing solutions to the world. So the question is, what type of solution do we want to bring to the world? What type of brand do we want to have? Start writing down some notes. We have to have a plan, and we need to start putting the legalities in order. We need to incorporate. We need to launch our business. We need to go ahead and start investing with a plan, okay? Knowing the phases of a cycle offers us the ability to determine when to purchase and sell. Bonus, at the end of today's article, we will cover the reasons Solana should be in our portfolio for a cryptocurrency investment to multiply our money. By applying cycle insights, we may increase our resilience and make money in both profitable and unsuccessful markets or down markets. Remember, an inside investor, we make money in any type of market because we have different assets and different asset classes. We don't just focus in crypto. We don't just focus on business. We don't just focus on real estate. We focus on all the 5 asset classes that exist: business, real estate, crypto, paper assets, commodities. We're constantly moving money from a cash flowing asset to another cash flowing asset. And we always have a plan ahead. Before we even touch our money, we already know where that money is going to go. And we're using other people's money as much as possible, meaning the bank's money and private investors' money, because the job number 1 of a wealthy entrepreneur, as I said earlier, is to raise capital. And the number 1 skill is to sell without selling, using smart systems and targeted marketing. We will discover that cryptocurrency requires a different strategy than stocks if we are accustomed to conventional markets. This is particularly true for cryptocurrency. It might be stressful to try to make sense of a market that is full of ups and downs. This post will teach us how to stay afloat and position ourselves for success during the cryptocurrency market's highs and lows. Let's get started. Why are market cycles important in cryptocurrency? Despite its seemingly complex nature, the cryptocurrency market may be deconstructed quite easily. It goes through several distinct stages which are impacted by things like media coverage, investor sentiment, and changes in the economy. Don't worry if we don't understand. We will explain it to all of us. The phases are as follows. Prices level out during accumulation and long-term investors begin purchasing. Demand drives higher prices when an uptrend begins, and marketing and media spend rises as well. Digital assets reach their peak during the distribution phase. Early investors collect their winnings, and volume levels out before a possible reversal. The last stage is a downtrend, which results in declining prices as sellers gain the upper hand in accumulating resumes. This pattern has often occurred with Bitcoin or BTC. Additionally, these cycles are subject to swift changes, typically as a result of regulations or investments from well-known companies like MicroStrategy and Tesla, because they can be impacted by things like global economic trends and regulatory crackdowns. These periods are far more volatile than in regular markets. Recognizing a crypto market cycles 4 stages. After discussing the 4 phases, it is time to delve deeper into the specifics. When prices and interest rates are low, seasoned investors purchase in bulk. At this stage, sentiment is typically neutral or negative. Recall the periods when people were negative about Bitcoin before its price increased. As demand rises and excitement builds, more investors join the rally. This stage can be identified by a noticeable rise in trade volume and a consistent price increase. At this point, the line is continuously rising and heading to the right on the token's chart. Because they know the peak is coming, smart money investors began to sell during distribution. As experienced sellers cash in on fresh purchasers, prices become unstable. Finally, a downtrend can cause a significant decline in prices since it triggers a wave of selling, because buyers who join late or miss the opportunity to profit frequently begin to worry. This period is the riskiest. This is the point at which panic sets in and the loudness rises. Although it is sometimes the most difficult time for novice investors, when prices finally bottom out, it also marks the next chance for accumulation of true wealth. How to succeed in bear market or downtrend. It might be quite difficult to resist the urge to sell our cryptocurrency when the market starts to decline, but it's best to have a long-term perspective. The following tactics may be useful. To diversify our risk and take advantage of those great lower prices, start by dollar cost averaging. Invest a certain amount at regular periods. Pay attention to items we trust. Research projects and strengthen our position during bear markets. Remind ourselves that downturns are a natural part of the cycle if we start to feel pressure to sell. Selling in a panic only results in losses. Here, maintaining composure makes all the difference. And that's what a plan will do for us. Once we have a plan and we expect a certain amount every month, or we know exactly how much money we're going to be accumulating, and we know everything about the asset, we have studied the history of it, we know the numbers, we have confidence, and we're not gambling. We're investing with a plan, which that is key. Getting the most out of uptrending or bull markets. When the market is on an upward trend, what should one do? For individuals who already own cryptocurrency, this stage can be thrilling and lucrative, but for those who wish to enter it, can be dangerous. It is simple to get swept up in the excitement and desires to follow the sentiments as the cryptocurrency market begins to rise. Steer clear of FOMO, fear of missing out, as investing too much at this stage may leave us overextended if prices drop unexpectedly. To safeguard our gains, set reasonable profit goals and take some profits as price increases. Now it is a moment to create a diverse portfolio rather than putting all of our money into one asset class. A crypto profit calculator is an excellent tool for calculating profits. Here are a few. We have added the links on our newsletter, on our article. Feel free to click the link somewhere in the description of this talk and take a look at the crypto profit calculator by CoinStats, the free crypto profit calculator on CoinLedger. Whatever we choose to do, keep in mind that the upward trend won't continue indefinitely. We hope that knowing that brings some consolation. To control our risk when trading, monitor our assets and employ stop losses. We have the opportunity to maximize our portfolio during this era, but avoid being overly ambitious. Utilizing resources and tools to monitor market cycles, we can use a number of methods to determine the potential direction of the market. Tools for measuring market mood include indicators like the Fear and Greed Index. Find the link on our newsletter. Additionally, on-chain data from sites like as Glassnode indicates changes in the behavior of major holders. Platforms like Lunar Crush, which follow social media chatter around cryptocurrency, offer sentiment research if we are truly want to see things from a wider angle. CoinMarketCap and CoinGecko provide simple, easy-to-use tools for novice investors. In-depth analytics on sites like TradingView may be preferred by more experienced investors. These are the greatest tools available and they are largely free to use. These tools provide our trading strategy, a data-driven approach, and assist us in sifting through the deluge of cryptocurrency news of social media. Emotional techniques for maintaining composure in the face of market volatility. So a lot of people that end up selling and they panic is because they don't have a plan and they never study the ups and downs of the market, and they're investing without a roadmap to success. We have to invest with a plan. We cannot call investing if we don't have a plan, because that is gambling. It's trading if the person doesn't have any plan. They're buying, holding, and praying that the market's going to change so that they can sell and get those capital gains. However, here we want to get positive cash flow. We want to focus on building passive income. So our efforts are directed to assets that build passive income, and that passive income will be used to invest in different assets that will bring passive income and also capital gains income. So we need to choose the right places to put our money and also other people's money, because we're going to be constantly raising capital. In order to become a true investor, we need to manage debt. We cannot be afraid of being in debt. We cannot be afraid of having a $50,000 credit line and investing that into a business that will produce $500,000 in the first year. We cannot create wealth without having debt. True wealth is built with debt, because debt is tax-free. We don't pay any taxes on debt. And when we build passive income with that debt, with that money, then guess what? Passive income is also tax-free. We can lower passive income all the way to zero legally when we have the correct tax strategy in place. We have the right CPA in our team. We have the right bookkeeper. We have everything documented. It's not about hiding money. In fact, it's about showing the government how much money we're making and where we're going to allocate that money in places where the law allows us to allocate that money to minimize taxes. We're going to turn everything into a business expense legally, and we're going to document everything and pay zero in taxes legally, because we can. This country and the capitalist system is built to pay zero in taxes legally. It's not patriotic to pay taxes. A lot of people think that paying taxes is such a wonderful thing. It's not. This country is not built for that. It's built for the ones that understands how to bring a solution to the world and capitalize on that and use that money to invest in different sectors that will improve the economy. Once we do that, as we mentioned earlier, we become partners of the government, and banks want to do business with us because the banks are in the business of lending money, and they cannot do that themselves. They need people in between the transactions that control the assets, that bring the assets to them, such as real estate properties, buildings, hotels, plazas, shopping centers, and any other type of commercial real estate property that we see all the time when we go out and about in the world. That is controlled with debt, and it's controlled with a person in between, with a company, somebody that comes in, because this is a capitalist country. The bank cannot just invest that money themselves, and they need somebody in between. So that's when we come in with a cash flow analysis. We come in with our personal financial statement. We show them that we understand how to manage businesses and real estate properties and investments, and we have the team ready to go ahead and take over that operation. That's what we have to do. We have to put deals together, because once we have that, the money will find us. Remember, there's enough money all around us. So here at Master Investor, we have the mindset of too much money, because that's the truth. The poor people see a world of not too much money. They see a world of there's a lack of money. And something else that we drop from our vocabulary once we enter Master Investors community is the word can't. We don't use that word, right? You can't afford something. We don't say that. We say, how can I afford something? How can we acquire that asset? How can we ask for a loan to acquire that real estate property? How are we going to put the cash flow analysis? How are we going to ask for the financial statements? How are we going to build an asset that will pay for that vacation that we want to have? It's all about focusing in the assets column. That's why rule number one in our community here at Master Investors, that we work to build passive income and multiply money through sound investing. And it starts with the first step. Have a plan. What is the idea? Write it down. A lot of people have all these ideas, but they don't have a plan. They don't write it down. What's the name of the idea? Go to Google and get the domain. Start building the list of things that we need to do in order to bring the product into the marketplace. And it doesn't have to be perfect. We don't have to be 100% with the prototype. We can bring that prototype into the marketplace and get a response quickly. We want to get that feedback, whether it's positive or negative. It's just feedback. We're going to take that, we're going to improve, we're going to have an innovation department in our organization so that it innovates constantly with products and services so that we can test the market. That's how we stay ahead from the competition. And that's how we discover new inventions as well. We're about to take a ride, so hold on to our feelings. And master investors always in control over our emotions. It may be a very potent indicator if we use investing to identify when people are feeling that way rather than letting ourselves feel that way. 4 indicators of FOMO or panic when selling in cryptocurrency are as follows. Number 1, having a sense of exclusion. Classic FOMO occurs when the price of a cryptocurrency token is rising and the person feels compelled to purchase it because everyone else is profiting. This feeling of missing out might cause people to make poor or rash judgments without taking the coin's true value into account. Number 2, impulsive purchases. FOMO is demonstrated by making rash on research purchases solely because an asset is trendy. This tendency typically occurs when excitement over a particular cryptocurrency grows, frequently as a result of news or social media influencers that are promoting such cryptocurrency. Number 3, regularly verifying prices. We may be responding to panic if we find ourselves constantly checking prices or new updates, particularly when values are declining. Continuous observation causes tension and may lead us to make irrational sales decisions. 4, fear-based selling. Panic selling is when we feel pressure to sell right away because prices are dropping. Without a defined exit strategy, this reaction frequently stems from a fear of further losses. We can control these feelings and more when we have a plan, even before we start the business operation or the investment that we're going to embark on. To prevent emotional reactions, set defined financial goals and think about automating our buys and sells. Reducing the frequency of our price or news checks might also be beneficial, while using that time to invest in self-development, getting ahead with our vocabulary in regards to business, particularly when the market is declining. We want to double down on our financial education because we want to be prepared so that we can take all the bargains that will appear while everybody's running away. We're going to acquire and get wealthier. Sometimes the wisest course of action is to take a step back. Investing is having a winning plan. We must have a plan with a lucrative exit strategy that assures us that we will get our invested capital back sooner than later, and the amount that we continue to collect after we recoup will be known to us. And we will definitely get that initial investment back as soon as possible. We want to touch that money. We want to be able to receive passive income from an investment. That's when we know we have a real asset, when we're getting paid on autopilot. Even while we're sleeping, that asset is bringing us money. And it doesn't require us to be present to make the money because it's composed of a system of systems. That's what a true business is. An investment is a business underneath. Sometimes the wise investing is having a winning plan. So we need to make sure that we have that in writing. We have our ideas in writing. We start forming that idea into a plan on a piece of paper so that we can go ahead and execute those initial steps to get that business off the ground, so we can get the website up, so we get our company up, we get all the legalities in place. We need to trademark the logo. We need to do many things, even filing a patent if we're creating a product. Why the poor are poor? Simply because of their priorities with money. They focus on the income that comes from a job, which is called earned income. That is taxed at the highest bracket, and there are not benefits to minimize taxes by operating on the left side of the cash flow circle. As an employee and self-employed, the laws are not on their favor. Okay? There's nothing wrong with being an employee or self-employed. We need great professionals. We need great employees in our companies. However, majority of people are not happy with their current situation at their job because they have other talents and other skills that they're more passionate about. So we need to create a path to break free from depending on a job to make money. And the only way to do that is to plan our investment strategy so that we can start multiplying the income that we currently have and then the income that we are going to raise through debt. We need to create a strategy right now that will be catered to build passive income that will exceed the amount of our living costs today so that we can break free and reach financial freedom. At that point, then we can focus our energy on bringing more solutions that we're passionate about into the world. We need to have big enough whys behind of what we do in order to overcome any obstacle that will come our way. And the only shortcut in life, as we always say here at Master Investor, is to learn from our real mentors, people that already have done or are doing what we want to do. And we're going to invest in their products. We're going to invest in their events. Today we have technology, so we can do it from home. But we're going to invest in those mentors that we have, because whether it's reading their book, whether it's reading their tools or using their tools that they have created, because they have already done what we want to do. So we're going to take all the good stuff that they learn, all of their experience, and we're going to make it ours by applying that into our lives and not making the same mistakes that they made along the way. So we're going to have an unfair advantage, and that is just about the only shortcut that exists in life. Any other shortcut might not be good to take. It will not be a shortcut. Sometimes shortcuts are actually the reason why people fail, because they try to cut corners. And talent could be there, but if the person doesn't put in the time, then the person who had less talent but showed up every single day, that's the person that's going to win, period. So the goal is to be consistent and committed in what we're doing. There are many formulas to become wealthy. We have to choose one, follow that, succeed on it, choose another one, succeed on it, and then repeat that entire process. That's how we become truly wealthy, by putting investing as priority, by understanding more about money each and every day. So for those who are listening to this extraordinary talk on money, business, and investing, feel amazing, because 97% of people will not be investing in themselves like we are today, which we are investing in the best education that exists, which is financial education. And this is what is going to make the difference in a year, 5, 10, 20 years, 30, 40, in our entire life will make a difference of what we do right now in this moment, how we strategize, how we make our money, how we think about money, what is money. The knowledge that we have about money today will make all the difference. So we need to update ourselves with the new rules of money. As we can see in front of us, we have a diagram, and it shows the income statement or the financial statement, part of the financial statement of the poor mindset. And it shows that their expenses column, their number one priority is paying taxes. And the reason why is because they work for earned income. So the employee and self-employed have earned income from a job. Therefore, they pay taxes first automatically, and maybe buy assets after, if any left. And the second thing that they do is acquire liabilities. And then the third thing is acquire assets if there's any money left, but they don't even have money left because they ended up giving that money away that they worked so hard for to pay for the liabilities and expenses. Now, there's nothing wrong with having liabilities and expenses, because we're going to expand our expenses column. When we build wealth, we're going to have more liabilities, more expenses. But the only difference is that those liabilities and expenses will be satisfied with the assets that we control on our assets column. The income that is coming from those assets will pay for those expenses. So it doesn't matter what type of liability we have because it's being paid with a business, with an investment that we made specifically to satisfy that liability. So anything that we ever get is free because we have approached it with a wealthy mindset. Poor mindset people attempts to buy assets with after tax dollars. Many times it is not enough to afford any assets after everything is paid, including their expenses from liabilities. Therefore, their assets column is empty, they lack financial education, and they do not actively invest themselves. They usually give their money away to somebody else to invest it for them because they're too busy working at somebody else's dreams, at somebody else's company. And they're giving their most valuable asset of all to somebody else's company. And they're dependent on that source of income. So they have no time to really make money, ironically, if they're focusing on working for earned income only. Why wealthy are wealthy? We choose the wealthy context and put our investments as priorities in our expenses column. So any money we ever have will have to go into a sound investment first before anything else happens to that money. The following diagram shows how we invest to become part of the small percentage that thrive in the game of money of the world. On the right side of the cash flow circle, as a business owner and inside investor. So as we can see on our screen, we have the wealthy financial statement, part of it, the income statement. It shows the income column and the expenses column. Here we can witness that the first expense that we have on our expenses column is acquired assets. So our businesses buy other assets first and then pay taxes after, if any, because we're using debt and we build in passive income, we can minimize taxes all the way to zero. And as we know, taxes are the highest expenses humans have. That's the number one expense in their life is taxes. So if we can minimize taxes by building passive income and using debt, we are already ahead and wealthier than the average person. Number two, we pay taxes, if any. We bring them all the way down to zero, like I mentioned. And then three, we acquire liabilities because we can. We can acquire any liability that we want because we're first focusing on acquiring assets. So the liabilities are free for us, literally, because our businesses are paying for those liabilities. Wealthy people buy or acquire assets first before tax dollars and pay zero in taxes in many occasions because we use debt and build passive income. Then we acquire liabilities by having the assets pay for the expenses of the liabilities. We can obtain everything for free. All is done legally using the tax code and corporate law and to our advantage. Conclusion remarks. I hope this post on today's talk has given us a better understanding on the many stages of cryptocurrency and helped us figure out how to utilize them to choose when to stock up and when to sell. Remember that every stage has its own set of chances and difficulties. And the more we comprehend these cycles, the more equipped we will be to make wiser decisions. Make investing in our future a component of our financial objectives and have faith in ourselves. Read our ebooks. We have 3 right now, the 10 new rules of money, how to build cash flow with the internet, turn passive income on, how to invest in crypto to build wealth. We'll be releasing our 4th ebook, how to raise capital to build wealth. And also our 5th ebook is coming out too with the digital course. It's a great time to get in our digital courses today because as they grow, they will become more valuable and anybody I guess in today will be grandfathered in to have access to any other asset that we add into that specific digital course for life. So when we get in today and 10 years from now, that particular course is worth way more. We will always have access to any asset that we add in there. So it's a great investment to our personal development in financial education, something that no one can take away from us. Bonus, why we should consider Solana cryptocurrency as a sound investment for our portfolio. Find out why Solana might be a better option in a volatile cryptocurrency market. Learn why Ethereum, Bitcoin, and Solana are safer options than other altcoins. Considering Solana as a digital asset rather than a gimmick to make quick money. When it comes to cryptocurrency, there are typically, but not always, 2 sides. Enthusiastic cryptocurrency advocates. Number 2, crypto detractors who are vocal. Despite the existence of these opposing viewpoints, we have found that many individuals who are considering include cryptocurrency in our financial portfolio do not fully comprehend how it operates. Remember that before we invest, we first learn about and put a winning plan together for the investment. This got us thinking about how to empower and educate hesitant cryptocurrency investors, which is how we looked at Solana as a possible remedy. Lottery tickets versus digital property. It might be very tempting for someone who is passionate about cryptocurrency to follow the buzz around tokens on social media and believe they are the way to make quick money. However, this type of thinking is similar to gambling, which is taking big chances in the hopes of getting big benefits without a plan and based on opinions. Remember, one of the main differences between the wealthy and the poor is that we know the difference between opinions and facts, and we measure our return on investment every single time with facts only. We know how to separate the opinions with the facts. Treating cryptocurrency assets more like digital property than lottery tickets will be a preferable strategy. We can position ourselves for more security and growth just by adopting this new perspective on our assets. Stress and FOMO, or known as fear of missing out, may be lessened by understanding that the market goes up and down and that this is all about longevity. It's all about putting our money from whatever we're making from our assets right now, from other assets, from other businesses that we have, placing it into the right cryptocurrencies because we want to invest in the 5 different asset classes that exist. Number 1, business. Number 2, real estate. Number 3, crypto. Number 4, commodities. Number 5, paper assets. What is Solana? A blockchain network called Solana was created to facilitate transactions more quickly and affordable than Ethereum. Since its 2020 launch, Solana has gained a lot of popularity due to its ability to process multiple transactions per second more quickly and easily than many other networks. The primary factor contributing to Solana's increased popularity among developers for decentralized finance, or also known as DeFi or DEFI, projects is speed. Why Solana? Solana provides an alluring balance between risk and returns for ancient cryptocurrency investors who are unsure which well-known tokens have a decent chance of surviving market turbulence. Remember that Solana is not like Bitcoin. Its price chart cannot display that level of strength. Nevertheless, investors who have carefully controlled their risk have found value in Solana throughout its downturns. The following price points from recent years should be noted. 2021, Solana experienced a surge in growth, peaking in November at about $259.44 for Solana. 2021 was a fantastic year. 2022, the market slump had an impact on a number of cryptocurrencies, including Solana, whose price peaked earlier in the year at about $179.34 before falling to a low of about $8.03 by the end of the year. 2023, Solana had a little uptick in price, peaking at $123.35 after dropping to about $9.96 in the early months of the year. 2024, Solana saw additional encouraging growth in 2024, peaking at about $209.59 by the middle of the year. When Solana is most effective, the possibility that their investment could lose all of their value during market downturns is one of the main worries of novice investors. This is an understandable fear, which is why risk management techniques like don't risk money that we can afford to lose, dollar cost average and modest risk control sums, establishing stop loss put, in place a system that will sell cryptocurrencies automatically if their value falls to a specific level. The wisest course of action in the Solana circumstance will have been to invest in it when it was at its lowest, not its greatest price. The ideal moment to invest in blue chip tokens such as Ethereum, Solana, etc. is when it has a track record of price increases, reach the bottom of it. Many developers are working on blockchain applications in the real world. Cryptocurrencies like Bitcoin, Ethereum, and Solana have outperformed other altcoins in terms of resilience since 2020. They are unique because they have practical uses and are supported by extraordinarily robust communities, making them more than just speculative assets. This can make these tokens a safe refuge for altcoins conversions when the market seems to be moving in a direction that incites dread. The greatest advice for Solana: there are certain useful skills that people who may already have Solana can take to make the most of this network. Number one, think about stacking on Solana. If we stake our coins on a proof of stake network, Solana provides token holders with a special chance to generate passive revenue or passive income. And that's what we're looking for specifically, because rule number one in our community here at Master Investors is that we work to build passive income and multiply money and sound investing. And that is what the ultra wealthy do every single day. And that's what we're doing that as rule number one. Rewards for Solana stacking are distributed every 2 or 3 days. We will regularly receive rewards for our Sol stake as a staker, and we might choose to compound them by restacking. The total Sol stakes and network conditions may affect the rewards. The APY reward rate might fluctuate over time and varies from 6 to 7% APY. Number two, examine market sentiment. If we choose to become associated with Solana, stay informed about its pricing and general atmosphere. Before making an investment, track market sentiment on forums, whale wallets, and social media to predict future market movements. Three, remaining liquid to make simpler to purchase or sell assets during market ups and downs. It may be wise to allocate a portion of our portfolio to stable coins like USDC or USDT rather than cash. Number four, avoid FOMO. Instead of following trends, adhere to our financial plan and ignore our FOMO, or the fear of something, because remember, fear only comes in when there's a lack of knowledge. Fear disappears when we become familiar with whatever we're looking at, whatever is causing us fear. So we need to do our due diligence. That's why the second most important words in the business language are due diligence. How to find out more about Solana: making sure we fully investigate tokens and networks before getting associated with them is a crucial stage in the cryptocurrency process. We may get more information about Solana on these websites that we put here on our article. Go to our website, find the newsletter, and click on those links right there, available for everyone to use. We have for the history and price chart of Solana, and then we have Solana 101 page. The official website and information page for Solana is called 101 page. Solana news: this is the official website and blog page for Solana. Our crypto courses, which provide education and awareness along with weekly crypto newsletter, are another way to learn more about blockchains like Solana and cryptocurrency in general. Being informed is the best course of action when it comes to cryptocurrency. Even with the several strategies discussed in today's talk, it can be challenging to reduce our risk factor when it comes to cryptocurrency. Creating a diversified portfolio is the key to surviving the turbulence of a crypto winter market. Investing in tokens during these downturns may yield rewards when they rebound, but bear in mind that this is only a possibility and not a certainty. Conduct thorough independent research and get appropriate guidance from a financial advisor. While having strong interest in cryptocurrency is admirable, learning more about it is even better. And applying what we're learning. Remember, once we learn something about money during the day, we put it to practice and then we teach somebody else. That's how we become better at it, and we can master that ability, that skill that we're honing down. Are we looking to invest in any cryptocurrency? Read our ebooks and get our digital courses with these tools and total guide that offers helpful advice to get us started in or inviting an entrepreneurial journey. Disclaimer, this article and this talk is not financial advice and is intended for educational purpose only. Our articles and talks are not sponsored or affiliated with any of the businesses, tokens, teams, or protocols mentioned. It is important to conduct thorough research and only invest an amount that we can comfortably, potentially lose. For financial advice, seek an advisor and conduct our own due diligence. Start investing today in high-quality financial education here at Master Investor. And remember, the tools and the resources are available today so that we can take advantage of everything that we have in front of us so that we can build financial freedom and true wealth. And it's all about preparing and investing in different asset classes. Start building a business that provides passive income. It could be somebody else's products too. We could use other people's products and of course other people's money, but we can also use other people's products to invest and create passive income, and that passive income will be used to invest in the asset class of crypto, in the asset class of real estate, in the asset class of paper assets, in the asset class of commodities, right? We're going to use that income, that passive income, to diversify among the 5 different asset classes that exist, not just one, like many people preach out there. Just invest everything into the stock market. And when the stock market crashes, then they lose everything. So we need to have businesses that are producing passive income. So think of an idea, think of a solution that we want to bring to the world, build a plan for it, bring the prototype to the market, and if we're using other people's products, then we can be selling that product very quickly today because the products are already created for us. Probably the websites, the sales pages are already ready for us to use, and all we have to focus on is targeted traffic, the people that are looking for that solution, and we just connect the end user with the provider, and we get a percentage every time they make a payment. And if it's a subscription product, then we get that percentage every single month in the form of passive income. So we want to have a business that's creating us money every single day because it's making sales on autopilot through sales funnels. And once we have that coming in for us, we can allocate that money into other asset classes that will produce passive income and sometimes capital gains income. And our money is constantly growing because we're moving it and it's never parked. Start investing with us here at Master Investor. Get our ebooks, get the digital courses, the 10 new rules of money, how to build cash flow with the internet, turn passive income on, how to invest in crypto to build wealth, understanding Bitcoin and blockchain, the rise of legitimate reserve digital currencies and assets. Get other tools. Follow us on Instagram, here on our podcast as well. Get our newsletter. We have TikTok, Facebook page. And remember, Master Investor's mission is to be the global authentic brand of money, business, and investing that elevates the financial well-being of humanity through high-quality financial education made simple. We look for opportunities to build passive income, win-win partnerships, and true wealth. Make sure to comment, like, and share, and leave a comment. And if you have a question, let us know. We're going to come back and open a dialogue. I appreciate the time that you have spent here with us today. We appreciate the support in business, bring you the good and bad news of money. Today we cover how to navigate crypto cycles as an inside investor and a wealthy entrepreneur. We understand that the market goes up and down all the time, and when it comes to crypto, even more, is more aggressive in many ways. So we need to prepare and we need to have a plan before we do any investment so that we know what we are expecting for that specific investment. and think of a solution that we're going to bring into the marketplace and start putting a plan together, because investing is having a plan. Stay extraordinary and wealthy. Thank you for having me. Bring you the good and bad news of money, the business principles that work in all economies. Go to our website, subscribe to the channel. I'll talk to you next time. Bye for now.